Business News now, and Stephen Carroll is with us this morning. Hi to you, Stephen.
Hi, hello.
We're going to start off with the European Football Championships, of course, and you've been looking at the question of whether or not it's good news for the French economy.
Well, millions of fans watching the games either in stadiums or in fan zones, of course, means a lot of money spent on food, accommodation and travel. The study carried out for UEFA estimates that hosting the tournament is worth more than €1 billion to the French economy. But there are major costs involved for France as well. Andy Hillier has been crunching the numbers.
On the face of it, no matter what happens on the pitch at Euro 2016, the host country is always a winner. According to a study commissioned by European football's governing body, UEFA, around €2.8 billion will be spent on the competition. That includes money spent by foreign visitors on fan zones, hotels, match tickets, and the money already invested by France on refurbishing the 10 stadiums that will host the matches, over €700 million. On top of that, the work of organising the tournament has led to the creation of around 25,000 jobs. That means more tax revenue, and on VAT alone, the government stands to make €180 million. All that sounds like good news for the French economy. However, it's not so simple. All that money wasn't magically created by the tournament. Some economists point out that the money spent by those already living in France would probably have been spent even if there hadn't been a tournament. What's more, even if Euro 2016 reels in close to 1 million sporting fanatics from abroad, it'll also put other tourists off. In all, the competition is expected to deliver an economic boost worth almost €1.3 billion. A tidy sum, but one that represents a tiny 0.05% of the French economy. As for UEFA, the giant of European football stands to walk away with €200 million in profit. And as an added bonus, it won't have to pay any tax on the money it makes in France.
Let's take a look at what's happening on the markets for you next. European shares opening down at the start of the day. That's the picture across London, Paris and Frankfurt that you can see. There's a lot of attention today on the debt markets. We've seen a rally in bond prices in Europe, which is driving down some of those shares. Shares in Lufthansa, the airline, down by more than 4% after the announcement that its chief financial officer was leaving. Over in Asia, a quieter day on the markets there. Mainland Chinese markets still closed, so Shanghai not trading today, but falls across Tokyo, the Hang Seng in Hong Kong and the Kospi in Seoul as well. Just some small gains on the Sensex in Mumbai.
We're going to turn next to the price of oil, Stephen. That's continuing its winning streak.
Yeah, the price of oil per barrel is actually down slightly today on the Brent crude index, but is on track for gains of almost 4% this week. That would make it the 5th consecutive week of rises in oil prices. It's the first time that's happened in over 4 years. The increase is down to a few factors, including falling US stocks and disruptions to supply in Canada and in Nigeria. Some more of the day's business headlines for you now. Prosecutors in South Korea have raided the offices of the conglomerate Lot Group as part of a bribery probe. Some 200 investigators searched 17 locations in Seoul, including its headquarters. The news is a blow to a planned stock market debut of the company's hotel branch, which was set to be the biggest IPO this year. A new report has estimated that 120,000 jobs will have been lost in Britain's oil and gas industry by the end of the year. Oil and Gas UK says that 84,000 workers lost their jobs last year, and they expect another 40,000 to go in 2016. This as companies struggle to cope with those lower oil prices. And Twitter has notified millions of users that their accounts could have been compromised because of a leak of usernames and passwords. A database containing nearly 33 million names was made public online on Wednesday, although the company says that millions of those aren't valid accounts. Twitter's information security officer says he's quite confident the information wasn't stolen from the firm's computers.
And finally, Stephen, a staple of London's roads could soon be a common sight in Paris too.
The company that makes most of London's iconic black cabs is pushing an electric version of the design for sale here in Paris. The car on show in the French capital yesterday. The London taxi company is hoping to start selling them to French drivers from 2018. The new model is of particular interest here as the city is to ban cars that are more than 20 years old from Parisian streets from next month, and they're hoping some of those may upgrade to a black cab.
Oh, I certainly hope so. They're a very smooth ride, if I do say so myself. Thank you for that, Stephen Carroll, with the Business News.